This is the last video on payroll, and we will be talking about payroll from the employer perspective this time. Okay, so there's certain payroll taxes, so those are not withholdings, not deductions, but payroll taxes that the employer is supposed to pay. So actually employees are quite expensive. It's not only the gross wages that you have to be paying, but you also have to pay payroll taxes on top of that. And they will result from three taxes that are levied on employers. Those are FICA, the same rate and amount that employees are paying, so exact match. We've got FUTA. So what is that? Federal unemployment tax. So this tax is levied to create a fund. So when employees are let go or become unemployed, they can collect unemployment before they can find the next job. And FUTA rate is 6.2 on the first 7,000 of taxable wages, total wages for all employees. So it's pretty small amount. And the employers who pay state unemployment tax, the next one, on a timely basis, will also receive a credit up to 5.4%. So generally the net amount that you will be paying is very small. Take a look, it's 0.8%. So it's less than 1. Be careful when you're calculating that tax. State unemployment tax, SUTA is usually 5.4, again on the first 7,000 of wages paid. And they will prompt you in the problems if it's subject to the unemployment tax or not. If they don't, then assume that it is all subject to the unemployment tax. Okay, so here it is, computation of wages. So these are gross, this is gross pay, total gross pay, and you will be you will be paying FICA, FUTA, and SUTA. Okay, so let's take a look. Academy records, the payroll tax expense associated with the January payroll are the following. We've got FICA, SUTA, and FUTA. If you know your, how do we do that? Look at this, 17,210. What is this? That's the amount of gross pay. Okay, so you will take gross pay multiplied by FICA rate, and you will put it as a credit, FICA tax payable, because later on you will have to remit it to the federal agency. Then you will have FUTA, again the same amount of gross pay times 0.8%. And remember, because it's 0.8%, you will have to enter it as, in the calculator, as 0.008. Okay, so remember you have to put less than 1%. And then the last one, again, gross pay times the amount of state unemployment tax, and it will be the last payable. Once you've got your three numbers, add them up, and this is your debits equal credits. That's the amount of your debit. So that's your total payroll tax expense. So recall, for the employees, we started with gross withholdings, that was your debit. Then we listed all the withholdings with the word payable behind them, subtracted them, and then your net pay, salaries and wages payable, was a plug-in amount. So gross minus all withholdings will give you net pay. Here, you almost start in the opposite directions, because you're going to plug in all the credits with the word payable behind, and then the total is going to go on the debit side. Okay, so what is that? At the end of the year, the employer is required to submit a W-2 wage and tax statement to each of the employees. What's in there? Wages, tips, etc., gross amount that was paid, how much Social Security, not withheld, but what is subject to the Social Security, Medicare tax, and then the amount of federal income tax withheld, Social Security tax withheld, so these are related. Medicare tax withheld, again, this is related. And then if there were any other additional contributions, you might have dependent care benefits that were paid, etc. and you will have to also give state income tax right here. So we all use this to file our federal and state income taxes. Okay, and let's take a look at another very small exercise. So we have another company, $70,000 payroll. All earnings are subject to FICA. Then here is your state unemployment tax and federal tax. Again, 70 is gross pay. That's what we're using for three taxes. And then add them up, and here is your total payroll tax expense, right? The total amount, sum of the three.